I've been nervous about this one. Losing $10 million is a big deal.
And then you yourself ended up losing $2 million.
Look, I don't think we're capable of overcoming all these changes in the market.
You misjudged once. What's to stop you from misjudging again?
There's a lot of lessons I think that we've learned. The major one I learned is
in real estate, it's always our winning investments that dominate the headlines. But there's rarely straight talk about the moment we realized our investments just weren't going according to plan. On this show, we sit down with operators, lenders, investors, and brokers, and we break down what really happened. Hard lessons most people would rather keep private. Welcome to the show.
I'm so glad we finally got to sit down with each other and do this. I know you're probably not as thrilled about it, but I'm really happy we're sitting down and talk story.
I'm not gonna lie. I've been nervous about this one. I think that I'm only doing it because you're forcing me to do it. And I mean, I guess let's just do it.
Heck yeah, there's only one way to go here, and
Yeah.
I'm hoping that you'll have some therapy at the end of all this.
I hope so. I mean, I hope that if it can help I hope if it can help one person, that's kind of why I'm doing it.
Yeah,
So
for sure. All right, well, we're just going to jump right into it, man. So, in March of 2025, you sold a property that lost all of your investor assets, all of your investor equity, totaling $8 million. And then you yourself ended up losing $2 million in total, totaling $10 million in losses from that one deal alone. I know it may be painful, but let's take it back and start at the beginning of where that deal came from and how you got to that point.
yeah. Again, that's why you can tell that I don't really like reliving this particular deal. I don't. I mean, losing $10 million is a big deal, and it's been the most significant loss in our company's history and in my personal history. To lose that much money. I mean, to think about it this way, I mean, I literally it took me close to 35 years to make the $2 million, and to lose that in such a fashion and so quickly was terrible personally. But what made it even worse was that losing money of investors and partners that really trusted us, trusted me to steward their money well.
Yeah.
And so to know that it caused harm or damage, to all those people, and then, obviously damage that it happened to, my wife and my own personal family.
Yeah.
It's just not fun to relive. It's not fun to talk about.
Yeah. Well, that's part of why I wanted you to sit down, because, I know how strongly you feel about this, and I know how much you care about people. And I think that that's probably what hurts the most, is that, you felt like you fell short in some ways to those investors who trusted you. And we'll talk more about that, but let's get back to the specifics. Let's talk about this deal specifically, about where it came from and how you got involved in it, and, what was going through your head at the time.
Yeah. So this property was purchased in 2020.
Yep.
We actually had it under contract, and then COVID hit. And looking back, it was a market that we were familiar with, but it was also a market that we didn't feel super strongly about. Like we had other markets that we really liked. This particular market was pretty stagnant, but we thought from our operational expertise that we could get purchase these two assets and turn them around quickly, and really bring some true value to the properties from a property level, making it cleaner, safer, and better for the residents, and then in turn, really hitting a home run for our investors. So that was really the intention. And, that's how we had it written up. That's how we had it scripted. It just obviously didn't go that way.
And even at the beginning of that project, there was some things that seduced you into, moving on it for other ways. Talk about, the finances of that.
Yeah. So That's a great point. So what happened, obviously COVID hit
Yep.
and everybody was at that time, if you recall, nobody knew what was going on. The world was kind of just up in ambiguity. People were nervous. And so we were too, and we actually dropped the deal. We said, no, we're not interested. And when we started to find a little bit more about COVID, a little bit more about what the government was going to do about COVID, about a month and a half later, the owner came back to us and said, look, I get it. It's kind of a weird time. Will you guys take a couple $1 million off the purchase price and still do the transaction with us? And they were wanting to exit. They had a fund that they were, selling all their assets in. So we thought, well, wow, this even sweetens the deal even better.
Yeah.
Even more.
For sure.
So maybe it was a sign to do it, to move forward.
Yeah.
So that was the thought process, getting into it.
And I mean, you'd had tremendous success up until that point. And success tends to breed a story, an internal story.
Sure.
What was your internal story at that point in your career prior to entering into that particular deal?
I think we're always we've always been cautious about what kind of deals we get into. We try to do as much due diligence as humanly possible and underwrite and scrutinize our underwriting and be as conservative as possible. But I think to your point, I mean, if we're being honest, I mean, when you have a certain amount of success, you think that you can operate or succeed your way out of it.
Mm-hmm.
And you think that everything, that you do is going to turn out okay.
Yeah.
Till it doesn't, and so that's the tough part. That was the, really hard learning lesson.
So you get into this deal in 2020. I'm sure, getting out of the gates, it seemed okay. What started to bubble up where you started to think, there might be some headwinds?
Yeah. I mean, it happened pretty quickly, right? Because the first headwind we went up against was the moratorium. So the government basically told everyone, operators like ourselves, owners, that you could not evict anybody. And part of our plan was we needed to evict a certain amount of the population that was living there because they were non-payers. And we really wanted to create an environment where we were going to attract a different type of client, different type of resident, one that would want to, be there, pay on time, have clean, safe housing, and be a part of a community.
Yeah.
And so when you're limited to that, you're already behind the 8 ball because you're trying to get out the wrong people, the non-payers, and you're trying to put in the right people.
Yeah.
So right away we knew, shoot, we're up against it. And then, as you recall, there was a shipping crisis during COVID. They kind of shut down the economy. So the shipping lanes were, the global economic trade and the movement of goods slowed down and actually stopped. Manufacturing in a lot of plants stopped. So we also had a plan to rehab, put money into it, upgrade the units, upgrade the outside. And a lot of that was slowed down because we couldn't get the product in time. So immediately we're right off the bat, off the 8 ball. But, looking back on it, you think, okay, we can still overcome this.
Mm-hmm.
Yeah, we're a little bit behind schedule, but, ultimately we've got the guys, we've got the team, we can do this.
Yeah. And coming off your successful past, that, it seemed very doable, I'm sure. And so, you have these headwinds start to emerge, but you think you can push through. Yeah. At what point did you start to realize, I'm not so sure that I can work my way out of this?
Well, once the Fed increased the interest rates, and they did it methodically over about a 11 and 12 month period, they raised it that many times. It had never been done in the history of the Fed.
Yeah.
And they took the rate from 0 to 4.5, whatever it was at its peak. And that's the base rate. So that means the interest rate was running with it. We started to really feel the pain because we had not put we had a floating rate loan on the property because it was a true value add. It was something that, and it was a short-term loan. It was a bridge loan, which we basically had 2 years and we had one extended year. And once the Fed started raising the interest rates, our mortgage payment kept growing and growing and growing. And so you can imagine from an operational standpoint, it's very tough when your biggest expense continues to grow and it's basically out of your control. And it was at that point that my partners and I were looking at any way, to get scrappy and we were starting to feed our own money into it. I was starting to put my own money into it to kind of, make sure that we were covering our mortgage payment, making sure we were covering the needs of our residents and trying to reposition the property at the same time. But I mean, that should have been the biggest red flag that, hey, we need to get out. But, going through it at the time, if I look back on it, you just kept on solving to the initial plan, right? We kept on looking back to our initial plan being like, hey, we can still solve to that initial plan. Right. And we weren't really honest and said, we should have been at that point been like, this initial plan no longer exists because the world that we used to live in pre-COVID or as COVID hit, when we purchased this property, no longer exists.
Yeah.
Right?
Yeah. You brought up a good word, this word honest. If we were honest, what did you have trouble being honest with yourself about at that time?
I think we need to be honest that there's a possibility that we could and maybe need to go back to investors and tell them like, look, this is not the same deal. Right?
Yeah.
And maybe to be honest and say that, look, I don't think we're capable of overcoming all these changes in the market. Yeah. Right? And the best solution now is to get out.
Yeah.
Right.
And was that what? Give a sense for those that haven't owned and operated in the way that you have about the things that go through your mind as you make those kind of considerations.
Well, the hardest consideration and the reason why looking back on it is one of my biggest mistakes, right? Is had we just led and told our investor base that, look, it's a change deal at that point. Mm-hmm. Let's just sell. And I know that we had underwritten or promised you X, but we just need to, it's a different world. We need to sell now and we just need to take whatever we can take. Now, whether that's just get your money back at that point or maybe make a small return. That's, I think, what I regret. One of my regrets is that not hitting it straight on and just being brave enough to say, look, this is probably a good result for what we're up against, right? Instead of looking at all our other results saying that, well, all that other stuff worked out, we can still continue to make this one work out, right?
Right.
And I wouldn't have, to the extent of, I continued to put money in. So it just kept building and building and building and had millions of dollars into this thing.
Yeah.
Because I believed that we could get past all this.
Yeah. There was a common term at that point in time where it was survive till whatever 25. The next year was, right?
Survive to 25. That's right. What it was. And we survived. Yeah. We survived to 25. We ended up selling it in 25, but we didn't really survive because we lost everything.
Right.
So.
Right. And I know it's hard to, as an owner operator, as a very successful owner operator, to come to grips with the fact that maybe this one was going to be one of the first ones that didn't get hit out of the park. What did that do to your confidence? What did it do to your self-esteem? How did you approach that situation then and then as you move into this new iteration of Two Waters Capital?
Yeah, I think once we penciled the loss and we realized that, part of the reason why I had so much money into the deal was I felt strongly that I didn't want to put our investors at additional risk. And I would have rather wanted to put my family's wealth at risk than theirs. Yeah. And again, as we discussed before, part of it was the delusion that we could operate our way out of this and we could overcome all the challenges in the market and at the property level. So I didn't want to do a capital call. I didn't want to go back and ask for more money. I just decided that, look, the best thing to do is just try to use as much as my personal capital to try to save the deal. And looking back, it's like the saying is, you don't throw good money after bad, right? And unfortunately, I did that with my own personal capital. So having lost all that and, penciling all that loss, looking back, you become just super self-reflective. I think you can go into some kind of painful and very dark places, about how you feel about yourself, how you feel about your business, how you feel about life. And it takes a little while to recover from that, And then I think, again, that's why I didn't want to do this. It's hard to relive it, but I think it's important though, because I am by nature a more positive person, to look at everything that's happened in your life. And I've gone through other struggles in my life.
Yeah.
And you look at all those and you say, what can I learn? What can we learn about this to not have this happen again, to do it differently next time, right?
Yeah.
And there's another saying too, I'm throwing out all the cliches in this interview here, but they say that you learn more lessons in your losses than you do in your wins.
For sure.
Right.
Yeah.
So once I started to embrace that, to get past it, and start to realize that, look, this is just a really, really difficult time, but it's a learning lesson and we're going to come through this. We're going to get through the other side. And now it's about, what do we learn?
Yeah.
What do we do different?
Yeah. And so if you could articulate exactly what that is that you're doing different and that you learned from, what's the takeaway that someone can learn from this?
Yeah, there's a lot of lessons I think that we've learned, and a lot of lessons that I hope that other people may learn from watching this. Some people may be in similar situations, whether they're an operator, whether they're an investor. Hopefully everybody can learn from these lessons. And I think the major one that I've learned, we've talked about it alluded to it a little bit about it, is when the market changes, and it will again, you really have to evaluate the deal within that snapshot of time. And you have to totally throw away what you anticipated the deal was going to be on day one when you bought it.
Right.
When you have major changes in the market, major swings, you got to be honest with yourself and realize that we're playing with a different deck of cards now, and really evaluating that hard. And sometimes your first loss will be your least loss. Right.
Yeah.
And being realistic and saying, look, this deal, although we thought it worked here, it does not work today and in today's environment. And so what we need to do is to get out now. Right.
Yeah.
Reset.
Yeah.
And whether that means you break even, you give your, break even on the deal, or maybe make a little bit of money. It's better than continuing to go down the path and continuing to try to be the hero, right? And save a deal that's no longer the same deal.
Yeah. Yeah.
So go ahead. I mean,
go ahead.
That's one. That was the first big lesson, right? So just reevaluate. First loss is your least loss. And then the second thing that I've really learned is that you really need to be diversified, and you got to have you can't concentrate your wealth in one bucket. Now you can concentrate your wealth in, say, real estate or whatever, whatever you're into. But to have that diversified within that investment bucket. So investment vehicle. Diversify your investments across multiple real estate assets, multiple properties.
Right. Let's dig into that just a little bit. So, many of you probably know, but for those that don't, in this situation as an owner operator, you really were forced with two options, equally bad options. Talk about those options.
Yeah. Right. So we alluded to it. Bad option one was we sell, which actually, and then probably break even, maybe lose a little bit, maybe make a little bit. And so we didn't want to face that option, which actually was probably the best option, right? As we discussed,
Yeah.
it would have been, in retrospect, it was the best option.
Yeah.
And then the next option was you ask investors for money, or you come up with more money to draw the deal, like to try to save the deal,
Yeah.
to try to continue to operate till you get to a better point where you're hoping that the market's going to shift. And that's the real difficult part, because you shouldn't evaluate on hope, right? Evaluations should be on numbers, and real life situations, right? So a lot of people are still stuck in these deals. And that's why I think it's important that we get this out there, that look, we thought, why did we say survive until 25? Because you thought that the Fed was going to drop the rates enough to bring back the values enough so that now you were evaluating your property like you were when you bought it.
Yeah.
Right. But the Fed would have had to drop that rate down to zero, and they're not even close, and they won't be close. So if you bought the property and when the Fed's funds rate and money was cheap and the Fed rate was zero, you'll have to have them drop it back down to zero to make it an equal type environment to evaluate your numbers.
Yeah.
Right.
Yeah.
And so that's not going to happen. Right. And so we don't, that's another lesson too, is you don't operate on hope. You evaluate your situation, and you make the best clear decisions you can off of that environment.
Yeah.
Right.
Yeah.
That you have there.
So someone might be listening to this and be thinking, and maybe you misjudged once. What's to stop you from misjudging again?
That's a great question. Nobody has a crystal ball. I'm not sitting here saying that, because we lost money now, all of a sudden we'll never lose money again. And, we have a crystal ball. I think just the reality of investing is that there's always a risk, right? And how do you mitigate the risk? How do you create investment vehicles to mitigate a total loss to your capital? Because we've always made it a priority, and that's still one of our core values at our company, is that we want to, number one, protect investor capital. My money is invested in it right alongside our investors, so I don't want to lose money for my family either. I don't want to have to come to my wife and explain those types of situations as well. So what we're doing now and how we're moving forward is creating vehicles in which we can invest in real estate, which diversify our money and protect our capital better.
Yeah.
So that's really our next generation of where we're moving.
And not everyone is moving there.
Yeah.
What do you think there's operators that currently aren't saying that maybe you're willing to say?
I hope this is going to free a lot of operators, honestly, because I know that there are a lot of bad deals out there that people are still holding on to. Yeah. There's a lot of deals that this story is not uncommon. Yeah. I think that there's a lot of operators that thought the way I did, and they wanted to, they were scared. They didn't want to lose their investors' capital. And so they ended up kicking the can as long as they could in hopes that the environment was going to change. And it hasn't. Yeah. And so we're at a point now where a lot of those deals are coming to roost, and just like ours did back in early 25, where these are going to start to come to boil to the surface. Yeah. And I would say just, try to be as honest as you can with operators, be as honest as you can with yourself and with your investor base. Try to be as transparent as you can. And not everybody's going to understand. Not all the investors are going to be, from an investor side, not everybody's going to be happy with what's happening, because losing money is never a good situation. It's very different. And what I've learned, it can become very personal for a lot of people, you know? But what lessons can you learn from that? Right.
Yeah.
And how can you solve your business problems? How can you create structures within your business when you move forward to solve for this happening again?
Yeah.
Right.
Yeah. Well, I got to be honest with you. I'm really thankful for your vulnerability and your willingness to come on here and share this story. I think it can affect a lot of people's lives in a positive way. And just like everything you do at Two Waters Capital, it's just being real with people, you know, good, bad, or otherwise. You know, you're just an honest man, and I appreciate that about you. As we bring this thing to a close, you know, how did you get the confidence to be able to sit here and kind of air your dirty laundry, if you will?
Well, I was forced by you. So that's
You're not
part
supposed
of
to
it.
tell them that. No,
Yeah,
I'm just kidding. No,
that's-
be honest. I know there's a deeper meaning to all this, and
For
I
sure.
know that there's more to you than just that.
Yeah, I think that we can, I think hopefully if this, again, I think I said it earlier, that if this can help one person, that's the whole point of it.
Yeah.
And by help, I mean, if it can help an operator come to grips with the situation they're in and want to move forward and do the right thing for their business and for their investors, which may not be, you know, it may be a painful thing, but it truly might be just at this point the best thing to do. Or if it's, you know, from the other side, and investors kind of trying to understand how this all transpired and where you're at now, and maybe what to look for in the future, on how to prevent yourself from getting into deals that may potentially end up like this. That's the real lesson, right? It's like, what can we can't do anything about the past at this point. We can rehash it like we have, but then what can we learn from the past to move forward into the future?
Yeah, that's a great segue. So, you know, this is a deal that's in your rearview mirror, and you've been there and done that and learned the lessons. What are you optimistic about moving forward from here?
Well, I'm optimistic to stop talking about this. And I'm optimistic about the way that we've structured things moving forward. I'm optimistic that the market seems to be correcting itself, and, you know, it's two sides of the coin. It's going to be unfortunate for people that are stuck in these deals that are going bad, but also it's a rebirth and it's a new birth for the investors and the people that will be brave enough to reinvest on the other side of the coin. And so that's what I'm doing. I'm trying to be brave and reinvest on the other side of the coin, get myself out of the past and put myself, you know, into the future, and put our investors and our company into the future moving forward.
Great story, man. Thanks for doing this.
Yeah, appreciate it, man.
You got it.
Take care.